$65,000 loss. This is my trading results in commodities and futures trading based on COT report from the week before the last week, because last week I was on the journey with my motorcycle in Turkey, so I had no time to record a video. I do it today, so I will record a video about the results from the week before the last week and from the last week. So the week before the last week was a loss of $65,000, and the last week I had a loss of minus $18,000. Now I'm in a drawdown. Let's have a look at performance. So you will find on my website the performance of all strategies and all trading accounts. Also, you will find here all the trades. So as you can see, I have a drawdown of 7.94% in my all account. So in COT1 trading strategy, I have a drawdown of minus 7%, startup trading account 0, and CO2 trading account minus 11.4%. I know how to deal in a drawdown because this is my 7th drawdown. So I'm experiencing that. Drawdowns belong to trading. This is the part of the game. Therefore, I'm not worried about that. Now I have to deal with this drawdown and have to do all what it's needed to come out of this drawdown and to make new all-time high. But let's have a look at trades. So first of all, disclaimer, futures trading is risky and so on. Please stop the video and read it. So then we start with COT1 trading strategy. The week before the last week, I started in the trading week with 2 positions in my portfolio. You can see it on the left side, and I ended up the trading week with 2 positions as well. So as you can see, the lean hogs was closed and I got a new position in my portfolio in soybean meal. The weekly trading result is $33,000 minus. Let's have a look at COT1 trading account. The account size is $856,000. So now I trade 1% risk per trade on this trading account. I decrease the risk from 2% to 1%. So due to drawdown. So because it's for me, it's very important to stay in drawdown in my best emotional conditions, and therefore if I decrease the risk per trade, it helps me to stay in my risk comfort zone. Let's have a look at watch list. I had several markets on the watch list, and we start with lean hogs. In lean hogs, we got a buy signal based on COT data analysis. And here on the daily chart, you can see I opened a long position in direction of daily upward trend. But after several days, as you can see, the market was in a range and I decided to exit the position break even. I moved my target to entry price and I was close with a small profit of $130. Next trade, Canadian dollar. We got in Canadian dollar a sell signal based on COT data, but there is some certain situation when I trade against the commercials in direction of trend. So I did it here because we had here in Canadian dollar very strong support and the market went over this support level. So we here strong breakout and I decided to trade in new direction of trend. So as you can see, my trade was not successful. We didn't get a trend continuation, trend change from upward trend to downward trend, and I decided to change my position as well because we had before a sell signal based on COT data. So, and the second scenario was realized, the market started to decline and I changed my open long position to a short position on my stop loss. So I was 23 contracts short in this market, but with this long trade, what I made before, so I made a loss of $17,000. So next market, corn. In corn, as you can see, we have a support level. On this price level, we got several buy signals based on COT data analysis. So, and after the trend change on the daily chart, I decided to open a long position direction of upward daily trend. But as you can see, I was stopped out here. I don't see here some mistake. It was normal trade. So this is a loss that this is a loss. This loss was not produced by a mistake. It was produced by trading strategy. The rules were correct, and therefore this loss is a part of the game. So the loss was $16,375. Next trade, soybean meal. So we got here a buy signal. We have also here strong support level, also the range market. On the daily chart, you can see we got a trend change, and I used the correction to open here a long position. So I split my entry. I increased the position until 2% risk per trade. The market declined, so the market closed on Friday not so far from my stop loss, and you will see in the next trading results from the last trading week I was stopped out in this market. So in the other market I didn't do any trades. The reasons are the same all the time. The market went in other direction, or I didn't get an entry pattern. With a small trading account, I didn't do any trades because the volatility was too high for this trading account size. So let's have a look at CO2 trading strategy. And the week before the last week, I started in the trading week with a open position in lean hogs. I was 14 contracts long in this market, and I closed the trading week with a short position in silver. So the weekly trading results minus $32,679. The CO2 trading account size is $489,000 and the drawdown is 12%. So I traded on this account 4% risk, so initial risk. So I tried with the position management and risk management to decrease the risk when I was in a open position, but the initial risk were 4%. In terms of this risk number, so the drawdown of minus 12% is a good result. So let's have a look at trades. So the first trade, Canadian dollar, also here a long trade in direction of upward daily trend. So I was stopped out with a loss of $11,000. Next trade, Swiss franc, the same picture here, opened a position in direction of daily upward trend, and in the same day I was stopped out with a loss of $10,521. So next trade, copper. Copper, I opened here a short trade. All the trades I opened in combination of COT data analysis. So based on COT data, we had here a sell signal, and I opened here a short position after. So I saw some correction in this market, but I was stopped out on the next day with a loss of $9,800. Next market, T-bonds. So I was too early in this market because we had before very strong downward trend, and my goal was to wait until the trend changed. So but I was too early in this market, so I didn't get a confirmation for a trend change. So I tried 2 times to open a long position to profit from trend change, but as you can see, we got downward trend continuation, and in both trades I was stopped out. So the last trade, I made $5,518. So next trade was a long trade in stock indices, S&P 500. I opened a long position in direction of daily upward trend. So, and I moved my stop to break even and was stopped out 2 days later. So let's have a look at lean hogs. So in this market, I made a profit of $3,920. So I decided to open the position before the price target because, as you can see, the market moved a correction. So I didn't see here a strong upward trend or trend continuation, and therefore I decided to close the position market. So, and the last trade, this is a open position in silver. So as you can see, I opened a short position in direction of downward trend. So after I saw here the lower high, so we got here also COT sell signal. So therefore I waited for a lower high, and after confirmation of trend change, I opened here a short position. This was the last trade from the trading results from the week before the last week. Let's switch to the last week trading results. They were not so much trades. I think we will be very fast here. So I started in the last trading week with a portfolio with 2 positions in my portfolio. I was 23 contracts short in Canadian dollar and 15 contracts long in soybean meal. So during the week, the position in soybean meal was stopped out, and as you can see, in portfolio was only 1 position left in Canadian dollar, 23 contracts short. So this is the account, COT1 trading account. This was the watch list. So this was the first trade. We already talked about this trading setup. So before, as you can see, to switch the position from long to short was the right decision here. So and the trend change from upward trend to downward trend, and yeah, the position was good in profit. Next market, soybean meal. Soybean meal, I got here a buy signal. So also this market, about this market I told before. So the same picture here, as you can see. So end of the story. On Monday, the market opened with a down gap, and I was closed. I was stopped out with much higher loss than I expected based on my stop loss, because due to the down gap. So the loss was $21,350 with this trade. So in other market, I didn't do any trades. The reason are the same. So the market went in other direction, or I didn't find an entry pattern. Also the last trading week I didn't do any trades on the small account. Same reason. So let's have a look at CO2 trading accounts. So here the trading results are positive. So I made a profit of $3,286. I started in the trading week with an open position. I was 2 contracts short in silver, and I finished the trading week with 3 positions in my portfolio. 12 contracts short in cotton, so 4 contracts long in coffee, and 1 contract short in silver. Let's have a look at trades. So I tried to trade stock indices again. So I choose Dow Jones E-mini because this market was stronger than S&P 500 in the last several weeks. So, but as you can see, we didn't get upward trend continuation, and I was stopped out with a loss of $5,775. Next market, soybean meal, so was stopped out on the same day with a loss of $10,780. Next market, coffee. So coffee, I closed a part of position on break even. So and with the rest of position for contracts, I'm still in the market. In silver, I was already 2 contracts short, but on Wednesday, so after I got entry pattern again, I decided to build up my position. So and close the position per price target on Thursday and on Friday, and I'm still in the market with 1 short contract. So I made a profit of $23,155. And the last trade, cotton. So this is a open position. So I opened here a short trade. So because we got sell signal based on COT data analysis, I'm still in the market with 12 contracts. That's it for today. This was a long video because the last week I didn't record a video because I was on the journey. So we go for vacation for 3 weeks. We will be back on 28th August. It means in these 3 weeks I will not record trading results videos. So I will do it in September, and I will record a video about the trading results from August. So I will be in vacation. I will not hold webinars, coaching webinars, and so on, but I will still trade. So therefore, the trading plans and the trading signals I will post as usual, but I will not record the trading videos because it takes too much time and I will be on the journey, on the road. So I wish you good vacation if you are in a vacation as well. So, and see you in September. So I wish you good trades next trading week. See you on the market. Your Max Schulz.